This is chapter 18, where we're going to discuss process costing. An example of process costing is providing costs for items that are very similar, that don't have a lot of differences between them. So imagine Kellogg, who makes us cookies, crackers, toaster pastries, cereal bars, etc. And you can see how these are nearly identical items that don't require, a job cost sheet for each individual one. As you recall from the last chapter, cost accounting systems are used to plan production, to price products, and control costs associated with production. And we have systems that allow us to do that. Here we're going to talk about the difference between process and job order costing. Process costing essentially is cost over identical units, as you can see here. But job order costing is for unique costs, very specific jobs associated with that. So companies that provide unique services or products use job order costing, whereas companies that mass produce identical products are best suited for process costing. So an example of job order costing might be used for a construction company where each construction job is different. Same thing, auto bodies, hospitals, surgeries or whatever might be different, and even accounting firms. But process costing will be ideal for packaged food products. Any gallon of oil, of petroleum, or barrel will be different, will be essentially identical to any others. Same as textiles and even automobiles might make sense to use more process costing systems. So again, job order costing uses different amounts. Each product uses different amounts of direct labors. Materials are unique, typically low volume, whereas process costing are high volume, identical, and use the identical amount of materials and direct labor for each one. So a survey of 141 manufacturers showed that 51% used job order costing, 14% used process costing, and 11% used some combination of both. And so you can kind of see how these are used across the various methods here. So as we talk about process costing, we're talking about mass production. And process costing measures separate the cost of performing each process and then allocates these costs to the total number of units processed during that month. And so these are going to be used both to measure the cost of goods manufactured as well as the cost of goods sold. And they're going to provide management with information about what the cost is per unit associated with each step of the production process. Case in point would be large bottles of Heinz ketchup used to have two labels, one on the front and one on the back. But through a careful analysis of manufacturing costs, it found that it could save several $100,000 per year by applying only one label. And so they found that by doing process costing. Next, we need to understand the physical flow. If this were a product, they're going to cut first, then assemble, then package. Okay, so maybe it's large metal, but instead of a really long roll of this, they're going to cut it into manageable size. They're going to polish, trim, and dip into a chemical bath. And then finally, the process would be to package. So we can see what this might look like. So production begins at metal by shipping rolled sheet metal to the cutting department. Then the cutting department tracks usage of how much sheet metal they used. And then these particular forms that are created are transferred to the assembly department. And then what happens throughout the remainder of the process, costs are tracked and assigned on a per unit basis. So it's really important to track not only the cost, but particularly the number of units. So how many units started in your work in process? How many were started during the period? How many units were transferred to the next department? And how many units remain at the end in working in process? So you can kind of see the roll forward here, but at each step, there's going to be costs and processes applied, and then we want to be able to manage those. So you can kind of see the various. So here's, again, if we were doing 3 departments, work in process for cutting, work in process for assembly, work in process for managing. And remember how we just said there's 4 steps: beginning, how many were started, how many transferred, how many remaining. Beginning, how many started, how many transferred, how many ending. And then started, how many are beginning, how many started during the period, how many were transferred out, how many remain in ending, and so forth in each of these processes until it's finally completed, and those costs essentially go to finished goods inventory. So each work in process account is charged for direct materials, direct labors, and overhead. In this way, it's similar to job costing. But for example, at Metal Products Inc., only those materials that require cutting are charged to the cutting department. Okay, any material costs traced specifically to the assembly and packaging department are charged in their respective work in process accounts. And so you can see in each, those are tracked, but they're tracked in each of the various work in process accounts where materials, direct labor, and any applied overhead is used. Okay, so let's look at this example here. In the current month, $200,000 in manufacturing costs, including direct materials, direct labor, and overhead, were charged to the cutting department. Assume also that this process department processed enough material to manufacture 10,000 units. Okay, so 200,000 divided by 10,000 is $20 per unit. And so when it comes time to transfer this out, we're going to take it out of the cutting department, the 200,000 that went and is transferred over to the assembly department for the full $200,000. Okay, so as we look at this, add cut materials from the cutting department and they go to the assembly department. So they come in, additional direct materials are added, there's a chemical process, and then once they finish, they're going to be sent to the packing department. And we note that direct labor and overhead are added over the entire process. So now let's look at the assembly department. Okay, so beginning work in process was $29,500, $200,000, which we just saw the journal entry came in. We added trim materials, that's here, these trim materials. We had direct labor, $105,000, overhead costs of $147,500. And these costs need to be accounted for in March. So we see what this looks like. So let's keep a look at this. Let's assume that on March 1st, 1,000 units were in process. The units were 30% complete. They had not yet been through step 2 or step 3. So let's go back here. This portion had been done. During March, 10,000 units of cut materials were transferred from the cutting department to the assembly department. And on March 31st, there were 3,000 units in process. These units were 80% complete with respect to their conversion. They had not yet been through step 3. So let's see if we can find that 80%. So they'd been through step 1, which is 30%. They'd then been through step 2, which is 50 more for a total of 80%. Okay, so we see where we're sitting on March 31st. Okay, so we started with 1,000, we added in 10. We had 3,000 left in ending inventory. So 8,000 were transferred to the final packaging department for 8,000. Less our beginning inventory suggested there were 7,000 units started and completed in March. So 7,000. Okay, so let's see the various processes here. So what are the equivalent units of resource input in March? Okay, we had to finish the beginning work in process of 1,000 units. So we didn't have any transferred in there, but we added 1,000 units or had 1,000 units where we did trim materials, and then we completed finished 700 units here. We also started completing 7,000 units, and that is here. So here's our 7,000 units right here. Okay, now start but not complete 3,000 new units. So 3,000 units had cut materials transferred in, yes. All of the trim materials, so here's step 2, so here's 3,000. And then 80% of the conversion happened in March. And so we're going to add up our equivalent units for each of these 3 processes. Okay, so 10,000, 11,000, 10,100. And so Note these numbers and see that they sit right here. And so here are the total cost resources used, 200,000. Okay, so that's from the cut materials, so $20 per unit, we know that. 44,000 worth of trim materials, and so that's $4 per unit. And conversion materials of 252,500 divided by 10, 100, and equals $25. Okay, so we're computing the equivalent units of production. Okay, so here is the details for the assembly department during this period. So for the assembly department, we start with 29,500 for the 1,000 units. We add labor, we add additional materials. This is for the cut materials and for the trim materials, and overhead of 147,500. So total to account for 526,000. Okay, so we've got to figure out where that 526 goes. Okay, so if we're looking for this 526, we see that some of the costs for 8,000 units were transferred to the packaging department, and some remained in ending inventory. And you can kind of see these steps here of what's done. Some of the units were from beginning work in process. That's the 1,000 units, right? That were still required 700 in conversion. And there were 7,000 that were done 100%. They were started, they were completed at $49 each. Now, where does that $49 come from? Well, 20 plus 4, 25, that equals 49. So you can see where that comes from. Now, ending materials. We have 3,000 units, and they have $20 worth of cut materials, so 60,000. The trim materials, 3,000 units at 2,400, or 80% of the 3,000 had completed conversion for 60,000. So we see this 394 that we transferred on. We see the 132 that remained in the ending balance of the work in process for the assembly department. So we can see what that looks like. So here's the transfer to the assembly department. So here's the 394 here. Take it out of assembly, put it into the packaging department for 394. Okay, assume you've been hired as the cost accountant of a large candy manufacturer. The company uses process costing. You observe that units of production pass very quickly through the various phases of production, often in a matter of hours. To simplify the accounting system, you propose that all manufacturing costs be charged directly to finished goods inventory, thereby eliminating the need to report any work in process in the company's balance sheet. Is this practice ethical? Well, I mean, the question is, if you did it one way or did it the other way, would there be a material difference? Would it matter? For example, what was there to begin at the beginning of the accounting period? What was there at the end of the accounting period? And are those roughly the same, or does this go up and down over time? Sometimes we're going to make some decisions that simplify the process, and there's not a material difference based on this process, so it might make sense to do that. All right, so now assume that Raintree Cola produces a bottled soft drink. We have two departments, the syrup and the bottling department. On June 1st, 1,000 gallons of syrup mix are in the syrup department. Costs associated with the mix carried forward from May 31st, totaling $4,400. The mix is 100% complete with respect to direct materials, but only 40% complete with respect to its conversion requirements. So we can see what that looks like here. So during June, they started 76,000, transferred 75,000. They had production costs within the department of 304,000 of materials, 75,000 of conversion. These conversion costs, be it direct labor or manufacturing. On June 30th, there were 2,000 of partially processed syrup. Already had the materials in there, but only 20% of the conversion. So let's see if we can see how this would roll through as far as equivalent units. All right, how many units or gallons? Beginning work in process totals 1,000. We started 76, so 77,000 went through the process. We have 2,000 left, and so we transferred 75,000, and 75,000 less the 1,000 suggests that 74,000 were started and completed in June. Okay, so If we're looking at our direct materials and then our conversion costs, we can see how this would look. The direct materials, 100% complete. We don't have to do anything there for that 1,000. But the unit starting completing was 74,000, and we had 2,000 at the end, and so 74 plus 2 because it already is 100% complete, so 76,000. All right, now for these 1,000, they were 40% complete when at the beginning, and so we've got to complete those for 600. We also have 74,000 that were started and completed, and then the final ending work in process inventory was 20% complete. 20% of 2,000 is 400. So you can see what that looks like there. And so you can see what these equivalent units look like. 304,000 divided by 76 is $4. 75,000 divided by 75,000 is $1. So you can see what that looks like. Okay, and so here is kind of more detailed of those unit cost flows, and I encourage you to look at these real close. Likely on your screen this is too small to see, but you'll want to walk through step by step so you can see that. Production cost report is a summary of the work completed during the month and of the related costs, both per unit and total costs. And this is going to be used to present the results of operations. So we're going to see our costs, see what it costs per unit, try to figure out, what went wrong, what went right, how efficient it was, and going forward. The appearance of these reports are going to vary company by company. I mean, they're going to do it their way. This is for internal purposes, not for external purposes. So they're going to want to try to understand that. So they're going to track the physical flow. Okay, how many units were there? Okay, so that's there. They're going to also want to look at equivalent units, and we just went through this in some detail so we can see what this looked like. But first, physical flow, then equivalent units, and we can see that there. And then part 3 is the cost per equivalent unit. And we just went through each of these processes, but here would be a summary that we'd look at. And then finally, total cost assignment, how these costs were assigned as far as the ones that were transferred, the ones that are still in beginning, the costs that were added, the ones that were started and completed here. So we're going to see these departmental accounting for equivalent units. Okay, so we have the various departments, the direct materials, the conversion for each of these completed during the month. And you'll want to stop this and kind of work through this one by one. So we know at Raintree's management, we use this cost data to make sure they're making a profit, set the sales prices, obviously consistent with the market, but we want to set it to see if we're able to make a profit. We're going to evaluate the efficiency of the department. We're going to forecast future costs based on what just happened. And we're going to value this inventory and in our cost of goods sold and in our balance sheet for our inventory that's sitting there on the balance sheet, and then our cost of goods sold on the income statement. So assume you're a manager of Raintree Cola product. It's one of your responsibilities. You must motivate, evaluate, and reward the performance of the managers. And so we want to evaluate them on costs. How efficient were they? Did any require rework? What's the quality? What are reasons why it was too high or too low or different than budget or different than expected? And we're going to use that to evaluate the efficiency of the department. And so we can see what has occurred within that department. Not necessarily the cost transferred in from others. That's not going to be allowed in because that's something that our department, the department we're measuring doesn't. So just because an upstream process had higher costs shouldn't make our own department look good or bad.